Hello again. Welcome to the week ahead update from Alpha Wave Trader. Hopefully you saw last week's update so that we can discuss, what's happened since. And if not, it's a good idea to go back and review some past videos so you can see how things have panned out from what I've been saying. And look, there's been a few comments made in the last month or two on gold, on oil prices, and on the S&P. Really, I'm trying to give you a understanding of my process. I don't want to be giving away too much information, but I'm hoping at this point that the ears are starting to prick up with the things I've been showing you. Because look, at the end of the day, I want your business. That's the fact of the matter. I'd like you to be a member of Alpha Wave Trader. I'm not doing this in some sort of altruistic need to show people my work. I'd really love you to understand what I'm doing and follow along with what I'm doing and why, and ultimately want to sign up to get actual trades and to get the rest of the information that I don't tell you about. But let's just recap over what I've been saying, what the S&P has done in this last week. You'll hopefully remember from last Monday with S&P sitting around here. Look, it's been the last few weeks. I've been warning pretty much since we had the confirmation of that weekly sell pivot with prices rolling over and giving us that first indication that they may be heading back to the downside, and also having the slight false break of the all-time high, which is a pretty usual thing to do. You'll see in the past what happened. This is the weekly chart of the E-mini S&P 500 futures, and you'll see with past sell-offs that you get a rally that just heads above, looking like it's a breakout, and then takes everyone out who has been bullish in that period before recovering again. And we've had a similar situation here, a really strong impulsive rally all the way back to the highs. And this weekly rally, you'll see, actually lasted from this buy pivot all the way back at the start of the year. And then we've had that weekly impulsive rally all the way to the high, and then there's your first weekly sell pivot. Some price action happening after it. And then last week I sent the warning bells saying, get ready, it's time. And I think last week I'm going to claim that as being exactly right on what was to come next. And now we're in a phase which is a tricky phase, because we're in the panic phase where things definitely have rolled over. And we're a couple of weeks out from expiry of options and futures. And this can be a dangerous time because a lot of option players will have sold strikes over time. And I can, tell you that for Alpha Wave Trader people, we have, for example, some 2650 puts in that E-mini S&P 500, and there'll be lots of other people who have also bought puts. So as prices rapidly decline, with only 2 weeks to go until expiry, the delta of their positions will change rapidly because the gamma is increasing. So what that means is that basically as prices decline, the dealers who sell the options are going to be forced to sell futures to hedge their position that they have, because they don't want to be exposed to, for example, the market falling in a straight line. That would cost them a lot if they weren't selling on the way down to keep their book flat. So we are in a period now when things can get quite explosive, and you'll see in the past how quickly things can move. But also, it's a time when you'd really need to have your positions on and ready, as we are with our 2650 puts, because if you don't have a position on now, well, this is now a very high risk point, because the lower it goes, the more rapidly it goes, the quicker it can have a bounce back, short squeeze. Even if it is ultimately heading lower, you're still going to be at much higher risk of the volatility really picking up. So just trying to chase the market when it's already sold off is really a good idea, which is why, you know, I look at these pivots and start to position myself once they've occurred, looking to capture the move back to the downside, and I'm looking at the waves that you've seen, and now that we have that wave in place, I can look at all those key areas, which is that midpoint, the sell zone of that wave, and the buy zone of that wave. And basically from here, you know, the next 6 months or a year of trading could be based on those levels. That could quite literally be the path the market takes over the next year, just constantly whipping out everyone as they get bullish and bearish, and either ending up heading to the downside, or, you know, thrashing around for a while, finding support and heading up. But understanding where the fulcrum points are within the wave is what can help you with positioning. So looking at the structure of this now, and now that we've got the sell-off, which has caught a few people unawares, and all the people who have bought positions on the way up will now be getting nervous the faster this accelerates to the downside, and you'll have people who bought up here who will be dumping positions at a loss. But the lower it goes, there'll be more people dumping their positions at break even, having thought a few weeks ago that they were going to make millions. So as this evolves, you know, and to give you an insight quickly into how I'm playing this based on these 2650 puts, and unfortunately we're probably going to run out of time on them because they are June, but the idea being, if we do get, let's say in this week, it could have a rapid fall to that midpoint, which is the point of control of that whole wave, and I'd expect there to be a volatile move from that point. It'll either break and really bucket to the buy zone of the whole wave, or it'll find big support and have a large wave up into the sell zone. So basically this 2650 area is a point of high volatility. So having bought the puts, what we can do is sell half the puts. So if prices rapidly move to that midpoint, we could sell half the puts, taking profit, and then buy calls. And we could create basically a cheap straddle using the profits made from the puts that we bought, buying calls, and then we'd be exposed to a rapid rise and a rapid fall. And that is pretty much the idea behind what I'm looking to do often, is get into these cheap straddles if I can, putting the positions on at a point when volatility is low and people are you know, thinking a trend is going to continue. And really the best points is when you've had that shift from the sell pivot occurring, and you've got more of a sense that there is a shift in momentum, and you know, you could be buying those puts up there. They're pretty cheap, being so far away from where at the money was, and once it gets there, you've made quite a bit of money just on those. You sell, take profit, buy some calls, and sit back and see what happens. And the bigger the volatility is, the happier you are as a trader. And that's really the holy grail, is to be able to sit back and be at a very high volatility point and be long a straddle at a very cheap price. And from there, it really is up to the market what it wants to do, and you're going to make good money either way. The further it goes, the happier you are. So that's probably enough for today. I was going to recap on a few things that I've been saying lately. I was going to take you through the oil price that I went through for you a while ago. Well, first of all, here's the gold price. I'll just quickly recap on that. If you go back into my past videos, I was looking at the monthly charts here on gold, and I was looking at this monthly key bar up. It's a concept which you may have to look at old videos to understand. And I gave you levels when prices were up here. And I said we could see a pullback in gold, and the levels to watch out for were 1290 being the buy zone of that key bar. Also 25% below, I said 1266. And pretty much the exact low after that time was 1266 to the dollar. And 1246 being the 618 below the key bar. So in the end, it's sold off all the way to the level 25% below the key bar, which was the support. And now prices have turned back up and created a weekly buy pivot. So from here in gold, it really can start to pick up to the upside and above those highs around 1380. Wow, gold can really go ballistic. And also I took you through oil a while ago, about a month ago, and gave you some levels. Weekly chart of oil. A month ago, our prices were, up in this area. We'd had the weekly sell pivot, and I basically said, we're looking at this whole wave higher from 2016 to 2018, and we were looking at the sell zone of that wave and the buy zone of that wave. You can see there in blue, and I'd said prices had nudged up into that sell zone, and we'd had the weekly sell pivot there, and I gave you targets back to the midpoint of that wave, and that midpoint comes in there around 53, 52, 53, and now a month later, that target has been reached. A move from around 63 down to 53. So I'm going to claim that one as done now. You can go back and review that video from a month ago. If it's not up in the playlist for you, I will make sure it's there, so you can have a look at what was said. And now, now we can start looking at this current wave down here, and I've got the sell zone of that wave there and the buy zone of that wave down here. So you can see prices rallied, nearly hitting that sell zone, and now have sold off and are about to hit the buy zone of that wave. So there will be a bit of support possibly around this 47 to 50 area in the short term, but watch out if that can't hold. Then you're looking at a move down to below $40 is a possibility, with things really looking dangerous with Trump putting on more tariffs for Mexico. So things starting to heat up, volatility starting to pick up, and hopefully after all I've been sort of saying over this last period, you'll be understanding at a deeper level how I'm looking at things, and now have seen a few things actually come to fruition. So hopefully you'll be back next week to listen to my next update. All right, cheers.